Good morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, June 5th. Happy Friday to everybody. And today is the big non-farm payroll numbers that come out that are due at 8:30 Eastern Time. So we'll see how the markets react to the number, right? It's not the number, it's how they react to the number, if it's going to be a positive or a negative. We could just see that we're starting to see signs of deterioration in the markets as we are hovering at all-time highs, just really chopping around for the last several months. So really, I mean, even the last 6 weeks have just been dismal. I mean, really terrible trading. You could just see this today. This is yesterday's chart. We were lower yesterday, but we broke back above the opening range, and then we sold down and we hovered all the way in through lunch, and then we broke down twice, and then we just kind of did the same going into the close. Just terrible price action here. Very difficult to get short unless you just close your eyes and get short, and that's not really trading. But nonetheless, markets were lower today. This is pretty much going to be the deciding factor here. I am still looking for, like I said, lower prices, and I mean a meaningful pullback, which could turn into a full-fledged correction. We'll see. And again, not to get short the market here, but I'd like to see some more evidence that we are topping. Again, mentioned about Russell. Watch the Russell 2000. It's usually a precursor to any kind of market tops or bottoms, and we're seeing some signs of deterioration in the Russell 2000 too. But again, still needs a little bit more work. But let's dive right into the indexes and see what happens here. Spiders, you can see we're still, again, hovering right back in. Now, it broke its 50-day moving average. Mind you, so that is definitely a negative, and the next target line would be here. I mentioned that early in the week. If we do take this out, we should close right at the lows of this lower trend line support. Now, remember, if today, if we rally and take that back, then we're going to negate this lower trend line. Then we're going to still be waiting for a break out to the upside to challenge the high. So, again, really haven't gone anywhere. If I just open this chart up, you could see we've really been range-bound here for the last 2 weeks here. And then, actually, if you take the bigger picture, we've been range-bound pretty much all the way up until March, besides this February breakout from here. But if you can see here, if I open this up here, we've just been really range-bound from the 212 to, let's call it 199. I mean, so you got a 13-point range in the Dow in all of 2015. I mean, excuse me, in the Spiders. So you could see tightening up certain channels. You know, we break out one day, we consolidate for like several weeks, and then we do the same. And now we're still in this consolidation phase here. Okay, so like I said yesterday, I don't think anything really negative has happened based on yesterday's little sell-off. Again, watching what Greece does, and of course the bonds. I still like bonds short, and I think that selling any decent rally in bonds is going to be a big profitable trade for you in 2015. And again, you could trade the bonds itself, the future to ZB, or you can buy the inverse, which would be the TBT ETF, or you could short the TLT, which is it's correlated with bonds itself. So those are some good instruments that I'm looking for 2015. IWMs, again, we're hovering right here. You can see this little area. We have this trend line area of support and resistance. We're stuck here in this horizontal area. We need to break down. If we don't break down, then we're going to end up breaking higher. Weekly charts look okay. They look fine. But daily charts are starting to break down. Look at the transports. Lower lows, lower highs, lower lows, lower highs. This is bearish symmetry here. Okay, we have bearish pattern, and we've now broken back up, and we broke back down again yesterday, where all we did was take that 20-day moving average. That is not anything bullish at all in the transportation sector. Regardless, and again, I understand that, you know, when I'm looking at an index and I'm like, this is our leader and it's breaking down, that doesn't mean you go run out and short the market, right? You want everything to start really forming and taking shape for a market correction or a market sell-off or even a pullback. And that's what I'm seeing. So that's why I'm liking more and more selling rallies here, because any pop-up has been sold into for the last couple of weeks. And that tells me that big money is selling into any rally. Okay, diamonds. Look at the diamonds. Broke the 50-day moving average. The next step is going to be this little interim support area, and then, of course, the 200-day moving average. So you could see lower, lower, lower highs yet again. And then lastly is the Qs. Did a little bit better. And remember, technology has been holding up quite well for all of 2014 and half of 2015. So still okay. But again, lost to 20. Next area will be that 50-day moving average. So, guys, really keep an eye on things. Be sharp here because markets are going to move really fast. I see a big expansion of volatility coming in, and I do think, like I mentioned many times, the markets are ready to vacate the premises, meaning that we are going to either break out or break down. And right now, to me, I do think that risk is to the downside. Would I like to see a market pop one more time and then fail? Absolutely, because that's going to happen. It's going to get all of the uneducated traders long way up in here, and that big money is going to get that one last time to sell the market before we have some sort of a pullback. So keep an eye on that. That may absolutely happen, okay? Have a great day. Enjoy the weekend, and we'll speak to you on Monday. Take care, everybody.